This is the E-Commerce Edge podcast with your host, Jason Greenwood. And welcome to another episode of the E-Commerce Edge podcast with me, Jason Greenwood, your host. It is my absolute pleasure to welcome our next incredible guest for you today, Mr. Parag Mamnani, and he is from Webgility. Parag, welcome to the podcast.
Awesome, man. Thank you for inviting me to the show, and it's great to be here.
It's my pleasure to have you along for the ride with me today. Founder, CEO of Webgility, been doing this for nearly 19 years now. So this is not your first rodeo, that is for sure. But before we get into Webgility, what you are, what you do, how you do it, tell us please how you got to be in this wonderful world of e-commerce and accounting and operations.
Yeah. Thank you again for having me. And, my story, I'm dating myself, but back in the dot-com crash, there were no jobs to be had. There was a boom in e-commerce and just online sites. And so I got my training wheels building e-commerce websites and software for small businesses, built an agency developing those sites, and then that helped me understand more about how businesses operate. I also then worked at Amazon for a few years on the web store platform and firsthand really learned how to scale, how to help merchants sell on marketplaces and make them successful multi-channel. And the gaping sort of problem that I could see in the market was that people were going to be selling on more and more channels, and they were going to have lots of different SaaS applications to kind of run their operations. That's when the idea of WebGility came about, and the number one problem I saw was that financials for small businesses were a problem, and everybody used to use QuickBooks. It's still the most ubiquitous accounting software. Yeah, I've been spent the last 18 years of my life trying to just solve that problem of automating accounting and keeping all the operations for a small business effective so they can continue to be profitable.
What a journey. And you, as like me, I've got a few gray hairs to show for my trouble. Been in the industry for 25 plus years now myself. And I love the fact that you were scratching an itch and saying, look, I understand what this industry is going through. I understand firsthand some of the challenges that merchants face when they're trying to become omni-channel enabled. And maybe they're not quite ready yet for a full-blown ERP system. Maybe they're not quite big enough to justify the expenditure on a full-blown OMS, IMS, WMS plus an ERP, and figuring out how that fits into their tech stack and how it gets system integrated with everything in their stack. And I suppose it seems like you saw the writing on the wall reasonably early on from a e-commerce platform perspective because you work very closely with Shopify, and you saw the writing on the wall pretty early on in terms of consolidation, in terms of the accounting packages that SMBs use for commerce to support their commerce backend. And you said, look, Shopify is not really a great demand planning platform. It's not a great inventory management platform. It's not a great PIM system. It's a great commerce platform, but there's lots of
And it's
things
trying to get there. It's trying
yeah,
to get there.
they're trying, but with 12,000 apps now in the App Store, they've got quite the ecosystem wrapped around them. And you obviously said, look, if I hitch my wagon to these two horses, I've probably got a pretty solid business opportunity along with built-in PMF right out of the gate. Was that kind of your thinking in the beginning was, look, if I plug into a couple of very strong existing commerce ecosystems, then I probably stand a pretty good shot of having almost, I don't want to say completely ready made, but certainly a more ready made market for my platform than if I went out and tried to build everything from scratch.
Yeah, that was certainly true when I got started, and the proof is in the pudding, right? We were a bootstrap business for the first, call it 10 years of the company. Certainly, finding product market fit and being able to deliver a solution that the market wanted was something we were able to achieve early on. Certainly, all the platforms have evolved, right? So back in the day, there was no Shopify, right? Like the dominant platform at the time was Xcart and OS Commerce, and you had all these open source PHP based tools, and it was QuickBooks and QuickBooks desktop solutions. And so cloud was not very prominent. So back in the day, it was definitely it was a bet. It was a calculated bet. And fast forward all these years, it's certainly still very much true, right? You certainly have a lot of consolidation around a handful of e-commerce platforms. You also have the rise of tremendous number of marketplaces. Obviously, post pandemic, you had this massive acceleration of point of sale and kind of brick and mortar businesses also becoming part of that experience and the ecosystem evolving to become truly omni-channel. But all of these pieces are still very much stitched together. And on the one hand, there's a school of thought that everything should be running centrally from just one system. And I find that really hard to digest, especially for most small to medium sized businesses, because you're going to solve the problem that's at hand. And typically that means you'll add the channel that works for you. You'll add the solution or the app from the ecosystem that really solves the current need. And then you end up with this sort of Frankenstein like solution of lots of different disparate systems and apps. And then the big question is, okay, how do I make all these systems talk to each other? And really, that's the problem felt like it was always going to happen. And that's how we're focused on really automating the workflows and bringing data together from all of these different channels that businesses sell on.
And how did you decide to niche down? Because I believe, and I've said this before on the podcast, that I believe niching down is a superpower. And it's hard to niche down because the further you niche down, you always feel like you're giving away opportunity. But actually, what you find in hindsight is usually you actually can execute on an opportunity. You can establish a bulwark. You can establish a moat. You can find product market fit faster. You can identify your ICP easier and faster. Niching down really brings massive business benefits, but it's hard to follow through on niching down. And I found this even when I first started up my consultancy. It was really hard. It was gut wrenching to really niche down and double down on B2B and make that a pure focus for the business, because it felt like there's so many other things I can consult on. You have to give up something to get something, right? And so you have to give up that maybe super wide funnel at the top end, but you can make your messaging much more laser focused. You can make your product much more laser focused. You can make your services much more laser focused. And ultimately, you can serve that ICP at a higher level as a result without spreading yourself too thin. So, how in the beginning did you say, look, we could be an OMS, we could be a WMS, we could be an IMS, we could start slowly adding ERP like functionality to our platform. We could even bring the accounting capabilities directly into our platform. But no, we're going to really niche down on just the inventory management piece, and we're not going to try to be all things to all merchants. We're going to really laser focus on this one problem that we see in the industry, and we're going to nail it. And we're going to try to do it better than anybody else.
Yeah, no, I think that's a really good strategy. I would just frame it a little differently. It's less to me about niching down because typically you start off with an idea. So you have to pick the lane you want to be in and where you're going to actually focus, right? So you would niche down if you've actually started something really big and then you want to pare it down to something narrow. I find that you want to start with a focused area. You want to focus on a problem that you're looking to solve. And typically you would start with a customer that's a target customer that you hopefully have a really strong sense of and you understand really well. And then you build from there. And typically, this has been the success story, I think, especially lately in the market, because there's so many SaaS applications and you really have to pick your lane. You have to pick where you're going to have your differentiation. So for me, the focus is always around financial data. The focus was always around accounting as a centralized system because most people don't think about it this way, but your accounting software is probably it's probably the only system of record that most small businesses have. It's the only clean system of record that they have. Lots of them will have CRMs, but there's a lot of muddy data there. You might have some sort of an email management tool with just a bunch of contacts. You could have an inventory management system, but most small businesses don't start there, right? Accounting is typically very central and core. Everybody's got to do accounting. You have to file your taxes. It's important for compliance. You need to know where the money is, otherwise, why are you in business, right? So it's where you focused. And then to your point, once you figure out your focus and you can achieve that product market fit, it's okay, where do you expand and when's the right time to expand? So I have to tell you, we've made that mistake too over the years, because when you start to work with customers, you find that they, especially in the e-commerce space, you're adding another channel, you're changing your shipping processor, you're launching B2B, or you're deciding to do a pop up, you may be going international, you change your fulfillment provider. So you want to try to consolidate some tools. So over the years, man, I got a lot of war stories. We've added shipping capabilities when it's like shipping's an entirely massive category that has a lot of different players. We definitely dabbled in some forecasting capabilities. We've dabbled in analytics. So we've definitely done a lot of things as the market and our customers pulled us, but we've always definitely stayed true to our core of we have to help you automate your accounting first, and then everything goes from there.
Makes complete sense. And how have you thought about, because there are other OMSs that maybe have elements of IMS inventory management built into them because it's difficult to do order routing and orchestration if you don't know where the inventory is held. There are pure play inventory management solutions like I'm trying to think that I just their name just
Quite
slipped
a
my
lot of
mind,
them
but
out there. Yeah,
yeah,
lots
there's a
of
lot of them
inventory systems.
unleashed
Yeah.
and there's a whole ton of them out there. And how do you think about playing nice, perhaps, because in the SaaS ecosystem, it's as much oftentimes about the integrations you have as about what your own software is capable of. Because, yeah, as you rightly point out, it's difficult to be all things to all people. In fact, it's an impossibility to be all things to all people. So, how do you think of yourself within the broader ecosystem of, say, a Pipe 17 or some of the other platforms out there that want to own orchestration and they need good quality inventory data from somewhere, and so they can get it from a platform like yours, for example. And so it means, like, in some respects, maybe if you were thinking of in the next, say, 12, 18, 24 months of getting into more elements of OMS, you might say, look, maybe Pipe 17 is a friend of me because maybe I want to start doing some things that they currently do. And there maybe there's going to be a little bit more overlap of our system. But then also Pipe 17, I'm just purely using them as an example, by the way, might make a great technical partner because of the fact that they need really good inventory data to be able to do what they do. And that's a gap that we uniquely can fill for them or for the merchants that they work with. So how do you start to think about, okay, here's some really important strategic partner technical partnerships we might need to have to be able to meet our customers' needs, and here's some maybe tactical short-term integrations we need to have, but in the next 18 months we won't need to have those tactical integrations anymore because our platform will be able to meet tick off two of those things that they would need to currently get from somebody else.
Yeah, it's a very interesting question. So, first off, I always start by trying to solve problems from the lens of our customer, right? So, who's our customer and what pain point are we trying to solve? Second, when you look at the e commerce market, it's massive, right? You've got millions of merchants just in the United States. When you start to break down that merchant base, and all the different platform players use their terminology. You got your solopreneurs who are just hobbyists and getting started. You then could have like legitimate under 10 employee e-commerce only business, or you might have a brick and mortar business. And then those worlds collide and you become omni-channel. And then you start to grow and become more of a mid-market and then ultimately an enterprise e-commerce business. As you look at these different market segments, there's just, man, there's so much opportunity. So I'm a big fan of Pipe 17. Lots of different players in our ecosystem that are coming at different parts of the market and trying to solve different problems, right? The target market that we serve are businesses, I'll call it anywhere from half a million of revenue up to 50 million of revenue, that are currently using, typically our merchants are using either their e-commerce channel as a lightweight inventory management system, or they are using QuickBooks itself or Zero, or they're using an accounting platform which also has lightweight inventory management capabilities. And so that's our target market. We also work with NetSuite merchants that then are using NetSuite as their IMS. As businesses, what I would call graduate or segment and move into a category where they need a standalone inventory management system, then our role changes in the equation, right? So now let's come back to the problems we solve, right? When I think about our customers, I try to bucket kind of what problems they're solving with, think about the jobs, right? So first and foremost, most businesses have some sort of a bookkeeper. Either they've outsourced a bookkeeper or there's somebody in their staff that's doing their bookkeeping. So that's one core job that you need somebody to go do for you. And Webgility helps make that bookkeeper's life easier. Or if you don't have a bookkeeper, we take care of most of your bookkeeping by automating all of the flow of your orders and payouts and fees and so forth from all your channels into your accounting system, right? So we've taken care of sort of the bookkeeper's job. I think the second role is what I would call an inventory manager or an operator. And the operators got another set of functionality, right? Like they need to track inventory, they need to manage the catalog, make sure the pricing is accurate, they need to think about replenishment. And typically, an operator is also doing B2B management, right? They're bringing in all the orders that are coming in wholesale and they're thinking about all those workflows across them. So there's a large part of the operational workflows that WebGility helps automate, right? So we can transfer inventory, we can help you list your products in your channels, we can help you sync your prices and keep everything intact, right? So we're then arming, enabling the operator's job. Last but not least, I would say is the CFO or controller, right? So as you mature, you become a larger business. Now you have a CFO or a controller that's looking for much more comprehensive insight and control across all your different aspects of the business. So tell me what my channels, all my revenue is across my channels. Where are my expenses? Where am I allocating all of my fees? How much did I pay for fulfillment? What are all my payment costs? What's my profitability? What's my cost of goods sold? And then in your world as well, you're looking at B2B, right? You've got B2B operational flows around, I got the order, but now I got to do 6 invoices over the course of the next 6 months. And, what about purchasing? So again, from a bookkeeper to the operator to the CFO controller, these are three kind of key jobs and roles that fundamentally need help. And they have a variety of problems that are mostly centered around either their accounting system or around their e-commerce channels. And that's our job. We make their lives easier. And so we can solve anything from managing your books all the way to helping your controller get a sense of what your performance is across all your channels.
Wow, it covers a lot of bases. And help me understand where you would typically sit in the broader commerce stack and kind of the routing and the let's just say, let me assume where you sit in, and then you can correct me if I'm wrong. So it's
Sure.
very important, especially if you are now obviously if you only sell through a Shopify, for example, then it's probably not going to be a scenario where you guys would be a great fit, for example. But the moment that I have maybe a couple of retail stores, maybe I'm selling on Amazon, maybe I'm selling on eBay, maybe I'm selling through my web channels, maybe I'm selling through a couple of wholesale channels, maybe a punch out catalog, maybe I'm selling through EDI. The moment you become omni-channel in any sort of variation of that theme, now all of a sudden you typically have inventory that is either sitting across multiple source locations and or you're selling to multiple channels and destinations. And so as a result of that, now even if I've got an owned warehouse and I'm not working through 3PL, now maybe I've got SKU XYZ and I've got 1,000 units of that. But what I want to do is I want to try to prevent overselling on any one channel. And so what I want to do is I want to split out and I want to say, okay, I'm going to allocate 10% of my inventory to the Amazon channel. So instead of sending all 1,000 units to all of my channels and making them available through all channels at all times, I set a rule and I say 10% to Amazon, 50% to my e-commerce store, 20% to my physical stores, and then another, I don't know, another 10%, say, for example, to social selling and social stores, TikTok shop, for example. And I want to be able to dynamically allocate that as inventory comes into my central inventory pool, or when it comes into, I got part of my inventory, maybe I receive into my own warehouse, part of my inventory I receive into FBA, part of my inventory I receive into a 3PL because I'm on the West Coast, my 3PL's on the East Coast. Oh, and by the way, I want to fulfill via FBA through Amazon. Now, without a without an IMS, and if you're just using a QuickBooks, it makes it really difficult to set a rules-based allocation or to even get a feed back from those channels and say, okay, as I sell down, I want to be able to update my central inventory management system. So I know at any given point in time on a really simple dashboard, I can look at all these channels and I can look at all not only the sales channels, but also the warehouse location and inventory locations. And I can say, look, I know where everything is at in my organization at all times, and I can dynamically reallocate if necessary based on sell through and momentum through any given channel at any given point in time and inventory availability. To me, it feels, and sorry to interrupt, to me, it feels like these accounting systems, like a QuickBooks or like a Xero, these lightweight, they're not an ERP and they don't pretend to be an ERP. But what they don't do is you might know, okay, I've purchased that 1,000 units and it cost me X number of dollars, and I have 1,000 units in stock somewhere. But knowing exactly where those units are at any given point in time, that's the tricky bit, and it feels like that's the bit you uniquely solve for.
I'll give a slightly different version of that. I think what you're hitting on is pretty accurate in that there is a certain level of both complexity and there's another level of, I would say, volume and velocity, right? So there is a complexity that's introduced with the more channels that you sell and you allocate inventory across channels. There's a complexity that comes in when the volume, the sheer volume of items that you have across these channels that you're managing dynamically, that creates pretty significant need for some sort of automation. And the last but not least is velocity, right? If you are selling ferociously through any channel and you need to tackle scale, then you need to have systems that are adapting to that. What's really interesting, and maybe this is what I encounter a lot more than maybe you bump into, but you'll be fascinated, I think, to hear that there are so many businesses who have the same level of complexity even without the velocity and the volume. So businesses that are selling on a lot of different channels who have inventory challenges and need to allocate accordingly, but they don't have necessarily the sheer velocity of transactions that they need to update everything very granularly and in real time. So if you consider these three axes of volume, complexity, and velocity, that dynamic is what really determines whether a system like QuickBooks is going to actually meet your needs or not. So if your velocity is not very high, but you have some complexity, QuickBooks can handle complexity. QuickBooks cannot handle ERP like complexity, but certainly with QuickBooks Enterprise and capabilities with their advanced inventory module, you can achieve a pretty sophisticated level of warehouse management. But that warehouse and inventory management also will fail when you start to hit a certain volume of transactions and a velocity of transactions. So you got to figure out where you sit there. So today we're built into QuickBooks Enterprise. QuickBooks and Enterprise solutions are integrated tightly with Webgility because if you are a QuickBooks Enterprise business, you have such complex inventory needs in all these channels, you got to use a Webgility because we help you list all your channel products to your channels. And to your exact point, we can allocate inventory by channel and set rules up. But now what I'll tell you is you hit a certain velocity of volume across any one of those channels and QuickBooks fails. So it's not even Webgility that's going to be a bottleneck. You're going to need to have a dedicated IMS or a warehouse management system. And we have a number of partnerships. Fishbowl's a great partner of ours. And Seven's fantastic. A lot of different tools out there that provide IMS, WMS systems. When you have that kind of velocity and volume, that your accounting system doesn't quite cut it. What we do is until you are in the QuickBooks ecosystem, we can help you alleviate a lot of the volume and the complexity challenges as you scale. Once you scale out of QuickBooks and say you go to a NetSuite, then our role kind of evolves where NetSuite now becomes the ERP system, or you use a Fishbowl as your inventory management system. But now our role changes where you're running inventory elsewhere, but Webgility is still playing the job of solving all your financial and bookkeeping needs. So we are still the system you're going to use to bring in all of your revenue data, your payouts, your fees from all of your channels. And so the part that maybe, Jason, you may not spend as much kind of time in, but businesses have, from the small to the largest business, bookkeeping and accounting is such a critical part. Businesses spend anywhere from, I would call it, 40 to plus hours a month in getting all of their financials done right and compliant. So even when you graduate to needing a standalone warehouse management system and you have that kind of velocity, Webgility is still a core part of their stack to help automate their financials. And so to your point about like where we fit in, we are at the heart of it providing a centralized kind of flow of data from all of your channels into your financial system. And so, if your financial system is also your inventory system, we become the operator. And like I mentioned, ultimately, everyone uses us to automate all of their revenue recognition, their expenses, and payouts. But some percentage of us they will evolve to also use inventory and other B2B related workflows. But yeah, I would love to tell you that there is a elegant block that is a merchant's tech stack and we fit there. But as you very well know, small businesses, man, they're so creative and they find just amazing ways in which they stitch together different systems. And we try our best to fit into the tech stack they have. But ultimately, when businesses think of finance and accounting, that's when they think about Webgility.
Makes sense because at the end of the day, it comes down to reconciliation, right? At the end of the day. And if you have money flowing out of the business, you need to be able to account for that. If you have money flowing into the business, you have to be able to account for that. And you have to be able to reconcile the two, right? I do it in Zero for my business and now my business is nothing. It's a lot easier to reconcile my business in Zero than it would be for an e-com business that's selling 100 orders a day or 1,000 orders a day or 5,000 orders a day. It's going to be a lot easier when you're selling services, productized services because the volumes are so much less and it's easy
That's
for
right.
you to manually reconcile. But when you're starting to get into high volume businesses, and I learned the hard way when I had my own e-commerce pure play back in the day that once you get to about 100 orders a day, you need some form of automation in there to help streamline exactly how you operate as a business, both in terms of the inbound products and the inbound inventory management and the receipting process, and then also on the outbound side, being able to reconcile that with the revenue that comes in as a result of those sales, and then being able to make sure that the inventory is actually available to sell.
Yeah, and this is exactly one of the reasons why I was so excited to chat with you today because when you think about the B2B world, your reconciliation and revenue tracking is a nightmare, right?
Yes.
Because most businesses are still accustomed to manual processes of generating and managing those B2B transactions. They are manually looking at invoices periods over time and figuring out how much they're going to fulfill with as they get in stock for their wholesale orders. And what we're really excited about is we've just launched, it's publicly going to be available tomorrow. We're excited. We're launching our B2B module for Shopify merchants, especially focused on Shopify Plus merchants who are running their B2B transactions through Shopify. So now what Webgility can do is automate not only the B2B transaction, but we can map out whether the sale occurred through a B2B, B2C buyer or B2B merchant. We map that merchant details and all of their payment terms accurately into their financial system. And over time, as you generate invoices for your orders, we can now incrementally update Shopify, notifying them of another invoice being generated. So you're able to track your receivables and also think about how much inventory that you still need to fulfill. So you get granular control of your workflows for even all your B2B transactions. We've pioneered kind of the way you run it for your D2C business, but now for B2B as well, we can orchestrate that workflow because it's not a one-time flow. You're not collecting all the money up front, you're collecting it on terms and you're fulfilling it over time. And we ensure now that Shopify and your QuickBooks are going to be in sync constantly as soon as those transactions are updated. And if you're currently used to manually doing things in QuickBooks, which almost all B2B merchants do these processes manually, now all of that becomes seamless because you can generate the invoice in QuickBooks and we'll automatically notify Shopify that the transaction's been additional invoices have been made and payments have been collected. So completely streamlining the way B2B workflows happen for these merchants.
And so in that model, you would control the order status in Shopify, and you would update the order status to ready to ship or whatever it might be. So that then
Correct.
whether you're plugged into an from Shopify, whether you're plugged into a OMS or whether you're plugged into a WMS, doesn't really matter at that point. Those secondary systems pull down orders based on order status. And so because you're then controlling the order and payment status, now we can get them to a status that then triggers off the collection of that order by the WMS, for example, for fulfillment.
Actually, we're very flexible from that standpoint because the moment a merchant, typically what we like to do is fit into the merchant's user behavior today and just automate their life. So if they decide to generate an invoice in QuickBooks for against that original sales order so that they can start to fulfill, we will take that invoice information and update Shopify incrementally as more invoices get generated. And I know this workflows, I know you're in the Shopify ecosystem. We're also building this out for BigCommerce, which also has its own B2B, obviously, capabilities. But yeah, ultimately, a B2B order is not one order, right? It's an order over time and it's broken into pieces. And we make sure that all the pieces come together so you know what you've left to fulfill and you've collected all your funds completely.
And when you move into that territory where you are more like the reconciliation platform, I almost let's say somebody migrates to NetSuite and it becomes their IMS because it's very good IMS actually, and it's a very good OMS actually. Then at that point, I almost think of you more like a middleware tool than anything else because what you're doing is you're taking those out of the box connections that you have with all the individual sales channels and all the costs associated with those selling channels. Those entries either you got to, for example, you got to export your costs manually out of Amazon and upload them manually into QuickBooks so that you can reconcile them. Or with your platform, it sounds like all those fees, for example, are going to be plumbed directly as GL entries directly into QuickBooks so that when the money is either removed from your account or you are short the settlement is short by the fact that you have a fee to pay to Amazon. For example, you sell $500 worth of goods on Amazon, but they settle to you $450 because of the FBA storage costs, for example, or the seller success fees, for example, or whatever it is. You need to allocate in your accounting system. Where did the other $50 go? Oh, cool. Here's the four line item cost entries from Amazon that need to make their way into QuickBooks so that when I receive a $450 payment from Amazon, but I sold $500 worth of goods. Now I at least know where the other $50 went.
Yeah, my simple answer to you is yes. That's exactly right because you man, all these years, everybody calls us different things. I wish I could nail one thing that everybody would call us the same thing. But yes, for a lot of businesses, think of Webgility as a middleware. A lot of businesses think of us as the accounting automation software. Many businesses think about us as a bookkeeping application. Our we are ultimately what we're doing is we're solving the pain point of making sure your books are reconciled and that your data is flowing elegantly across all your systems. And yes, in this particular example you brought up, yeah, absolutely. That's exactly what we do. We take your marketplace, we bring the settlement data in, we can categorize all of your revenue and fee components and your sales tax components, your reserves, and we elegantly record it into journal entries in your accounting system so it neatly matches your bank deposits and you have to do almost no reconciliation balances at the end of every settlement period. We work similarly with Shopify, so we'll bring in your payouts on a daily basis and it reconciles neatly there. We also connect to your payment processor so we can bring in payment fees. And and yeah, ultimately, when you're tracking your financials, you can do so on a summary level by bringing in if you're not tracking inventory, you just bring in a summary of all of your revenue, expenses, and fees, and you net it out to your deposits. You can summarize them at a sales level and take all your inventory and COGS into account and create one neat kind of daily sales receipt. Or if you're a higher volume business and you track inventory closely with WebGility, you can also bring in every single sales transaction. So every order can be recorded, every item gets tracked, every customer is available to you. So you pick your poison, however you like to do your business. You want to bring in summary data or get it at a granular transaction level, we can handle it all.
And one of the challenges that I've seen, particularly small and medium sized businesses face when they're not using an ERP, but they're using a basic accounting system like a QuickBooks or a Zero or something like that, is the fact that typically any integration that exists out there, like an A2X or something like that, for example, the biggest challenge I see them face is that the the middleware wants to bring in transactions in an aggregated way underneath a web sales account, for example, in the accounting system. And it says, okay, we're going to break out sales by channel, but we're not going to break out sales by customer. Now that becomes a real challenge when you want to start doing reporting and segmentation and all sorts of other things down to the customer level, even in your accounting package, but definitely in your ERP package, that doesn't work. That you need to have each individual sale syncing down to an individual customer in the accounting package, and that feeds into a lot of other data and a lot of other analysis and BI that you need to do across your business and your customer cohorts, particularly where you can start recognizing multiple sales across multiple different channels against the same customer. So we can then start doing analysis of saying, okay, I have this customer, they bought sometimes in store with me, sometimes online with me, sometimes through Amazon with me, but I can now, because they are all the same customer and I can recognize that customer in my accounting package, I can now track sales by channel against that customer and I can start running analysis against that, right? So I can say, where do I want to encourage them? And so for
Yeah.
you, do you guys do that? Do you create the customer if they don't yet exist in
Yes.
QuickBooks? You create it?
Absolutely. Absolutely. Yes, we do.
Wow. Wow, and so you,
Um,
instead of syncing to a standard bucket account, oh, Shopify sales, now you can actually bucket it down to the individual customer that made the purchase.
we actually have a very detailed blog post on our site about summary versus transactional accounting. I will say this is one of the more controversial aspects of the various solutions that are out there. Clearly, a lot of different players promote creating summary entries. I think for some businesses, a summary entry makes a ton of sense. It's actually really easy for the bookkeeper. They
Yep.
can just create a journal entry of total revenue and expenses and categorize fees, and they can net it out to deposits, and their job is done. It's really simple. That really solves one major problem. I get my books clean and that works really well. But what if you run your inventory out of your accounting system?
Yeah.
And what if you want to do reporting? What if you actually want to figure out which customers are buying more or less from you? What exactly, to your point, how do I know which customers, which items are more profitable and not? Now, what you're doing is really what you're saying is don't use your financial system of record to do that reporting. Either come to me, I'm the bookkeeper, I'll help you do that, or get yet another piece of software that's going to do your analytics and give you that kind of granular reporting. So, what we believe is you don't have to use another piece of software to do that reporting. QuickBooks should be your system of record. It should be able to give you your financial details. And we give you choice. By the way, we give you three choices. You can take every single transaction, every single customer, and record it at a granular detail level. So you could do as great reporting as you like. By the way, not only can you take every single transaction, you can break it down by payment method, so you know exactly the clearing account and the payment processor that was used against it. And we bring in fees at the order level. So we know every single product, every single customer and order, and what the fees were, profitability at an order level.
Wow.
Number two, we can summarize your sales. And so we can group all of the transactions you received by payment processor on a daily basis. So you don't have to track every customer if you don't want to, but we'll know every product that was sold, the quantity and COGS, so that you can get summary reports at an inventory level. That's option two. And option three is what you just described, which is, I think, the most simplest and rudimentary way to do this. I'm actually just flabbergasted why everybody just gravitates to that as the simplest thing, because it's a summarized receipt, it's a summarized entry for the month. You're essentially taking potentially tens of thousands of transactions and simplifying them into six different entries in your accounting system, which I think works for some type of merchants who are looking for clean, simple financial books. But the moment you want to do any kind of analytics and do analysis on what's happening across your products and your customers and channels, that's not the best bet. We believe in flexibility. We believe in helping our merchants the way they like to run their business. So we offer all three choices.
Wow. I love that. I love the flexibility. I love the fact that you recognize that sometimes we have to meet customers where they are, even if we wish they weren't where they are right now. And I guess also it creates a pathway of evolution for your customers to say, look, okay, this is how we do it today. It's working fine for us now. We do 20 orders a day, but once we get up to 200 or 2000 orders a day, all of a sudden this doesn't really work for us anymore. And we need, if you're only doing 20 to 50 orders a day, then maybe running a granular analytics isn't actually going to help you or benefit you, because you're doing such small volumes that the data set is so small that it's so insignificant that maybe somebody's running it as a side hustle, for example. Then in that case, who cares? But once it these businesses start to take on a life of their own over time, and giving someone an off ramp off of this bucketized way of handling their business into a much more granular, much more financially led way of running their business, then giving them an off ramp into that more granular solution feels like a really good option for your customers, because it gives them a way to migrate without leaving your platform.
We're the number one solution in the market, Jason. We do all this automation and we can support businesses of all types. And now I'm so excited that we can also solve a big pain point for B2B merchants, because it's been an unsolved problem for the longest time. Lots of customers have been knocking on our door asking for this automation piece. And yeah, B2B is now definitely core focus areas. So yeah, all the way from bookkeepers to controllers and being able to automate D2C and B2B transactions, we feel pretty good about what we're doing for our customers.
I love it. Apart from this new B2B module, which you said is coming out tomorrow, which will be the 9th of April, because this episode won't come out for a few weeks yet. Your new module will come out the 9th of April. But what is on your radar over the next, say, 6, 12, 18 months? What are your customers asking for that maybe you don't do yet, or any other gaps in the market that you haven't filled yet that you'd like to fill? What's high on your priority list? AI, it's on everybody's lips, so I won't even necessarily ask you specifically about AI. But what is the opportunity that you're seeing out there that you think, hey, man, we think we can capitalize on this?
Yeah, listen, I feel that barring all of the challenges right now that merchants are facing with tariffs and all the changes that are about to come ahead, ultimately, listen, margins are getting squeezed and businesses need to find ways to make more profit. And the way that they can make more profit is they got to have really strong control over their expenses. So we're just constantly trying to figure out ways to help our merchants cut costs. And so whether it's cutting bookkeeping costs, it's cutting your end of month reconciliation costs, it's helping you cut your costs for operations, helping you figure out how are you going to streamline your fulfillment processes and think about purchase orders and drop shipping capabilities. So we're looking at all of the different ways in which we can help our merchants reduce these expenses, especially in times like today. And from a AI perspective, absolutely. We launched our first AI agent about 4 months back. We've learned a lot from having that done that release about what customers are looking for, what kind of questions they're asking. And yeah, down the road, I certainly see a lot of innovation coming. We're building AI agents to help our customers automate some of their onboarding workflows. We're looking at AI agents to help answer lots of granular questions about how their business is performing. And ultimately, we're going to be looking at how can I give margin level insights so that businesses can have a better control of their cash flow. How do they can they predict their forecast, cash flow? And yeah, lots and lots of opportunities, but certainly AI is an important part of it, and just helping find more and more creative ways to reduce our customers' expenses to make them more profitable.
I love that. I love that. And how do you guys make your money? Because you're a SaaS platform. In some cases, you're a primary operating platform. Some cases, you're a middleware platform. Do you have just standard tiering? Do you charge on a per transaction through the system basis? Do you charge on a per user basis? Kind of how do you go to market with your pricing model?
Yeah, one of the key things about SMB is that pricing transparency is absolutely crucial. So all of our pricing is on our website, webgility.com. Just click on the pricing tab. We
Basic and
charge
pro. I love it.
That's right. Depending on which accounting system you have, we charge a different couple of different packages. Again, think about it as, are you a bookkeeper, an operator, or a controller? Which package might be fitting your needs? The packages do include a certain number of channels and order volume, but they scale as you kind of add more channels or add more order volume automatically. And then we typically don't charge by users. We as many seats as are needed to really automate their workflows. We open those up, but yeah, it's a standard SaaS pricing and it scales as merchants are more successful in growing, we grow with them.
And then I guess, like, for example, let's say I'm on the pro plan, it includes 2 sales channels. Let's say I add 2 more, then presumably you just upcharge for the additional channels that they need support with.
Yeah, it's pretty straightforward. It's just a per channel fee.
Love it, love it. Listen, this has been a great conversation. In all transparency, I've never used Webgility before, so it was fantastic to actually hear in more detail. Of course, I've heard of Webgility, but never used it. And so it was great to get a deeper understanding from the horse's mouth, so to speak, the head honcho, the boss. It's
Well,
great to be
thank
able to journey down memory lane. When you brought up the word OS commerce, it took me right back to
you.
one of the first e-commerce platforms I ever worked with in the industry was OS Commerce. So it was a fun walk down memory lane for me today. I really appreciate your time. And
Of
now, as we
course.
do come down to the end of our time together, I get to flip the script. I get to hand the microphone over to you. You can ask me one question, any question you like. It can be personal or professional. And so I'll love to hand the microphone over to you, Mr. Parag Mamnani from Webgility. What is your question for me today?
I'm going to ask you a controversial one. Who wins the B2B, Shopify or BigCommerce?
Oh, look, I wouldn't want to. Yeah, that's a tough one. That's a tough one. Look, I think BigCommerce has their hands full, and that's just being honest. Look, I've been a BigCommerce partner and a Shopify partner for many years now. I have gotten more heavily the last 4 years, in particular, the last 4.5 years, have gotten heavily into the B2B world, and so most of the target manufacturers and distributors that I would work with as my ICP, they're already bigger than BigCommerce or Shopify, and they need something that's more dedicated towards hardcore B2B. I think basic D2C brands that want to start adding strategic wholesale channels or wholesale brands that are just doing wholesale volumes of traditional retail products. I look, I think commerce or Shopify can meet those needs really well. But when you get into super complex B2B use cases with some of the more table stakes type of stuff that the more complex B2Bs need, neither Big nor Shopify are gonna get you there. They're just not, without either massive customization, additional third-party tools or apps, or both. And so I think Big has their hands full because for a long time they were light years ahead of Shopify from a core B2B functionality perspective, customer groups, price lists, all that basic stuff was even available in the enterprise version before they came out with the BigCommerce B2B edition version after they acquired Bundle B2B and rolled that. That became their B2B edition. And unfortunately, still to this day, B2B edition is an app. And that to me it's untenable. That cannot persist. It has to become part of the core platform. It has to have the same endpoints as the rest of the BigCommerce platform. And I think they're having some product development challenges right now. I think they would be pretty open and honest about that. And Shopify has an almost unlimited checkbook to pour into product development. So that's where we are. I think there's a closing window of opportunity over the next 12 to 36 months for BigCommerce to really solidify its place in the B2B ecosystem. I think if Shopify continues to pour the money and focus into B2B on Shopify Plus that they have over the last 18 months, things are going to look very different 18 months from now. Very different. They still lack they've got all the core data primitives in Shopify Plus now that you need to run a B2B operation. Now, they have to have all the other functionality layered on top of those core data primitives to make it a turnkey solution for larger, more complex B2B enterprises. And that's why solutions like SparkLayer B2B, that's why they exist. Because first of all, B2B on Shopify only works on Plus. That's the first thing. And second of all, they don't meet all those more complex use cases that a lot of businesses that want to do B2B on Shopify need, and therefore SparkLayer can come in over the top of Shopify and add that additional functionality. Look, it's really hard to say, but let's just say that in 2 years from now, 24 months from now, Shopify will be probably much more neck and neck with much more of a place of parity with where BigCommerce is today than they are right now.
Yeah. Yeah, didn't mean to cause controversy, but yeah, always
No, I
fascinated.
love it. I
And
love
I'm a
those.
fan of your walking podcast, your walking videos, and yeah, I've been following you guys, your work on LinkedIn, and so really appreciate the opportunity to come on your podcast and enjoy the conversation. Hopefully, we'll get some more visibility, and then now you'll learn more about Webgility, and so will all of your audience. And looking forward to doing a lot more work and working with B2B merchants.
I absolutely love that. What's the best way to get a hold of you? LinkedIn, your website, email. What's the best way to get a hold of you if
Yeah,
anybody wants to find
LinkedIn
out
is the
more?
best place. Just look me up, Parag Mamnani, and yeah, I do post every now and then, and yeah, follow a lot of cool people on there and post updates both about our products and my musings on what's happening in e-commerce and tech. Yeah, LinkedIn is the best place to follow me.
I love it. We'll drop your LinkedIn profile link into the show notes as well as your website link into the show notes, and people can get a hold of you from there. I really appreciate your time. Thank you for sharing all about Webgility and taking me down a really lovely walk down memory lane as well. I super
Of
appreciate it. Can't
course.
wait to speak to you again soon.
Yep. Thanks so much for having me.
Are you a B2B or D2C e-commerce merchant? Then head over to greenwoodconsulting.net to learn how we can help you scale your business.